Insolvency and Bankruptcy Code 2016. At the end of the chapter, you'll be able to explain the concept of insolvency, bankruptcy code, and explain the relationship between bankruptcy, insolvency, and liquidation. Explain the importance of terminology used in this code, identify the structure and applicability of the code. Elaborate the manner and process of insolvency, resolution process, and corporate person. Introduction. Concept of insolvency, concept of bankruptcy. The term insolvency is used for both the individual and organization. Individual insolvency is when the default of the payment is not paid. Default is defined in Section 3, Clause 12 of the Insolvency Bankruptcy Code of 16. Untreated insolvency will lead to bankruptcy, and for a corporates and liquidation process, the creditors put money into debt investment today in return of the promised fixed return of cash flow. Deposit போடுறோம் மாதம் மாதம் ரிட்டர்ன் வருது. But the return expected on this investments are still uncertain because the time of repayment, the corporate of individual may make repayment as promised, as he may default or does not make the payment. The default happens in payment. The debtor is considered insolvent. The debtor may be considered insolvent because of financial failure or business failure. Financial failure, persistent mismatch between payment of the enterprises and receivable into enterprises, even though the business model is generating revenue. Business failure, which is breakdown in the business model of the enterprises, and it is unable to generate sufficient revenues to meet the payments, and there may be avoidance of a transaction because which also insolvency may have happened. Term insolvency can be individual, organization corporates. Individual known as bankruptcy, organization known as corporate insolvent. State when an individual or company default in making payment, and the value of the asset is held by them is less than liability. State when an individual or company default is making payment, the value of asset held by them is less than liability. Liability value. So what is an liability? அதிகமாக இருக்குது, asset கம்மியாக இருக்குன்னு அர்த்தம். இஃப் அன்ட்ரீட்டட் இன்சால்வெண்ட் லீட் டு. ஸோ எந்த கம்பெனி தன் சொத்துக்கு மீறி கடன் வாங்கிறதோ அது இன்சால்வன்சி போகும். டெப்ட் ஈக்விட்டி ரேஷியோ பார்க்கணும்னு சொல்கிறாங்க ஃபார் கம்பெனிஸ் அண்ட் கார்பரேட்ஸ். ஃபார் நான் கார்பரேட்ஸ் பேங்க்ரப்சி, ஃபார் கார்பரேட்ஸ் நான் கார்பரேட் பேங்க்ரப்சி, ஃபார் கார்பரேட் லிக்விடேஷன், ரெண்டு வார்த்தை இருக்குது. For the purpose of making for the above evidence that for the above it is evidence that insolvency state and bankruptcy is conclusion. For the above is evidence that insolvency state and bankruptcy is conclusion. A bankrupt would be a conclusive insolvent, whereas all the insolvencies will lead to bankruptcies. Insolvency divisions are being solved through resolution mechanism under the code, and failed resolution mechanism may lead to liquidation process irrelevant to the corporate and bankruptcy process in relation to the individual under the code. Avoid transaction. It is covered under Chapter 3 of IBC 2016. The relevant provisions are following: preferential transaction, undervalued transaction, transaction defrauding creditors, extraordinary credit transaction. There is also provision on fraudulent trading and wrongful trading. So these 5 things: professional transaction, undervalued transaction defrauding creditors, and extorted credit transaction, and also provision for fraudulent transactions and wrongful transaction. Extraordinary credit transaction, what is that? Extraordinary credit transaction refers to agreement or arrangement in which credit is extended to borrower on terms which is significantly unfair, harsh, and unconsequential. These transactions were designed to exploit the borrower, even involving exorbitant interest rate, fees, and other obsessive terms of benefits, or unreasonable high rates, unfair term, exploitative nature, lack of free consent. Legal provision in the applicability convention. Consumer Protection Bill, UK uses residential research lender, understand lender, seek legal advice. Okay, thank you. Adi vatti. And the IRP or RP, which is RP recruiter has formed an opinion that determine that avoidance transactions and thereby file and petition through honorable NCLT under the above provision against the perpetrator, where the timelines prescribe that all the activities under the regulations, however, times is not mandatory as per the NCLT. Case law. NCLT is a matter of Prasant Chandra Rathan, a suspension director of the corporator versus Surya Kant Satapathy company appeal 850 2020 company appeal 896 920 30th September has decided that CARP regulations 35A is not mandatory and required for approaching and adjudicating authority for appropriate relief and before 135 other insolvency commencement date of the audit director. Relationship between bankruptcy and insolvency condition. It is a lucid language. If a person entity is unable to pay off the debts at its own, if a person is unable to pay off the debts its own to the creditor on the time in which it becomes due and payable and it default that such person's entity regarding insolvent. Bankruptcy, it is a legal proceeding in which a person or a business is unable to repay the outstanding debts. The bankruptcy process begins with a petition filed by a debtor or a debt creditors. All the debtors' assets are measured and evaluated, and assets may be used to repay the portion of outstanding debtor. Liquidation. It is a winding up of corporate entity. These are many persons that can initiate processing cost liquidation, and that being a regulated body, is a director of the company, shareholder of the company, and creditor of the company. They can initiate. Nutshell, insolvency is a common both bankruptcy and liquidation, not being able to pay the debts, and when they became due or payable, and the lending causes liquidation, not being able to pay the debt as and when they become due and payable, and lending causes liquidation, and it is only then causes the natural person to become bankrupt. Objective: a sound legal framework of insolvency law as recommended to achieving the following objective: improved handling or conflict between creditors and debtors. It can provide procedural certainty about the process of negotiation, such a way as reduce the problem in common property and reducing information asymmetry of all economic participants. Improve handling. So the improved handling of conflicts between creditor and debtor, it can be provide procedural certainty about the process of negotiation in such a way as reduce the problems of common property, and reduce the information asymmetry of all the economic participants. Avoid the destruction of value. It can also provide flexibility to parties to arrive at the most efficient solution to maximize the value during negotiation. The insolvency law has created a platform for negotiation between creditors and external investor, which can create a possibility of such rearrangement, drawing the line between malfeasance and business failure. If malfeasance and the promoter should be held responsible. If a business fails, then the company should move forward for its resolution. Malfeasance. Narayana. Malfeasance is an example of dishonest or illegal behavior established by a person or authority. The recommendation of the Bankruptcy Law Reform Committee leads to enactment of Insolvency Bankruptcy 2016 May 28th May 2016. The IBC consolidation all existing insolvency related law has brought about the revolution changes in the form of robust, modern, sophisticated insolvency framework. The framework seeks to achieve a resolution for corporate debtors in distress and falling debt. The liquidation in the time-bound manner. Prior to the IBC, the legislative framework for insolvency and reconstruction was fragmented across the multiple legislation. It is Companies Act, as a Stick Industrial Companies Act 1985, Securitization, Reconstruction of Financial Act, and Enforcement Security Act 2002, Recovery of Debts during the Bank and Financial Institution, RDDBFA Act 1993, Presidential Town Insolvency Act 1909, Provisional Insolvency Act 1920. The preamble of the code. The objective of the code is given in the preamble. The Act 2. The consolidated amend the law. The consolidated amend the law relating to reorganization and insolvency resolution and a corporate person, partnership forms and partnership corporate person, partnership forms and individuals. In time bond manner of maximization of value of assets of such a person to promote the enterprise. Availability of credit, balance of interest to all the creditors. What is the preamble of the code? Objective of the code in which preamble? Availability of credit and balance of interest to all the stakeholders, including alternation in order to priority payment to government dues, to establish an insolvency bankruptcy board in India, to for matter connected within an incidental scenario. IBC is not a recovery mechanism. As per the preamble of the objective IBC resolution, corporate debt are and it cannot be used for recovery mechanism. Case law. The NCLAT and Company Appeal Tribunal of 520 17th January 2022. It is a matter of Amazon Communication Private Limited versus EATS Estates has ordered that the provision of the code cannot be allowed as a recovery mechanism. The provision of the code cannot be allowed as a recovery mechanism or to recover the claim of interest by the operation creditor. It's not a recovery mechanism. Then what? It initiates the action. It say you should insolvent. It's with ordering mechanism. Okay, it's not a recovery mechanism. பணம் தரலாம் கேட்க முடியாது. Structure of the code. The structure of this code is constructed in 5 parts, contain 255 sections of 12 schedules. Each part deals with the different aspects of insolvency resolution process. Part 1, Part 2, Part 3, Part 4, Part 5. Part 1 Preamble. Preliminary. Short title, extent, commencement, application and definition. Part 2, section 4 to 77. Insolvency resolution and liquidation of our corporate person. Preliminary application definition, corporate insolvency, preliminary application definition, corporate insolvency and resolution process, liquidation process, pre-packed insolvency resolution process, fast track corporate insolvency resolution process, voluntary liquidation corporate person, adjudicating authority for corporate person, and offenses penalty, insolvency resolution and bankruptcy for the individual and partnership forms. Part 3. Preliminary, fresh start process, insolvent resolution process, bankruptcy order for individual and partnership form, administration, distribution of estate of bankruptcy, adjudicating authority, and offences and penalties. Regulation of insolvency provision, agencies, information. Insolvency and Bankruptcy Board of India, power and function of the board, Insolvency Provisional Agency, Insolvency Provisional Information Utility, inspection of investigation, finance, audit, accounts and audit. Miscellaneous Schedule 4. As an Insolvency and Bankruptcy Board of India is established to administer the work of insolvency and bankrupt of the corporate person. Insolvency Bankruptcy Board of India is established to administer the work of the insolvency and bankruptcy of the corporate person, firms and individual. The IBBA is a regulatory who is regulated the main component of IBC ecosystem, that is IB, Insolvency Professional Code, Insolvency Professional, Registered Valuer, Information Utility, and IPA second limb of regulator. IP. Foundation code. The key innovation of IBC is a 4-pillar institution framework comprised of first pillar, second pillar, third pillar. For the first pillar, what? The judicial adjudicating authority, being a national company law tribunal or adjudicating authority where corporate insolvency matter shall be heard, and the NCLT will be appellate tribunal. Second regulator, which including Insolvency Bankruptcy Code of India, which regulate oversight over insolvency professionals and insolvency professional agencies, IPA. Third pillar is a class of regulatory person being an insolvency profession who play a key role in the efficient working and insolvency and bankruptcy process in IBC. Fourth pillar is a new industry called the information utility of electronic stores, factors which lenders and terms of lending. So first NCLT and the IP agency, மூணாவது வந்து key role efficiency of the bankruptcy process for the lending and lenders of electronic stores. And the intimation of corporate insolvency. அவன் எப்படி வேலை செய்யலாம் lending okay. Intention of corporate insolvency regulation process. The CIPRP process may be initiated against a corporate debtor by insolvency debtor itself, the financial creditor or operation creditor. When the code was enacted, the minimum amount of default to initiate CRP against a corporate debtor was 1 lakh rupees. However, the central government was notified on 21st March 2022, raising the threshold limit of minimum amount of default of 1 crore rupees. Detailed procedure of initiation of CIRP of stakeholders designed. When a corporate person, when enterprises default on the start of the process CIP year, control of the enterprise shift to committee of the creditor, assessee of the proposal, review the enterprises or take execution. Decisions are required to be taken in the time-bound manner so that the greater chances of the enterprises saving ongoing concern and productive resources of the company economy can also put to the best use. The CIRP commences from the date of administration of admission of the application filed for initiation. The process entitled the moratorium, which comes it's doing where the calm period is imposed and there is a stay on the suit of processing against the corporate data to give data to better chances of survival chance to review and continue the going concern. Memorandum period is 180 days and the initial limitation. The COC with 66% of the majority decides that the complexity of the case required more time for resolution plan to be finalized. The one-time extension up to 90 days can be granted for the prior approval of NCLT. So 90, 180 plus 90, 270 days or maximum. One time. CARP may be mandatory for completing within the period of 330 days from the insolvency commencement date, including any extension and time taken for legal proceeding in relation to the regulation process of the corporator. So maximum of 330 days, 270 plus 330, na? So another 90 days. Totally, that's all. And then said amendment has been undertaken to ensure the time resolution to view the fact that 270 day deadlines has been breached. Said amendment has been undertaken to ensure that time resolution of view of the fact that the 270 days deadline has been reached on account of the legal proceeding against the corporate. The provision relating to corporate. I have the provision relating to the corporate insolvency resolution clause, Section 4 to Section 32 of the Code is applicable. The provision relating to the liquidation process of the corporate, Section 33 to 52 of the Code will be applicable in the case where the enterprise is undergoing liquidation. The provision relating to fast-track corporate insolvency resolution process of a small corporate, Section 55, 58, or 58 to 55 to 58 of the Insolvency Code will be applicable in the case where the enterprise is a small company as per the Companies Act 2013 and startup or unlisted company total assets not exceeding rupees of crore. An unlisted company total asset not exceeding 1 crore. The provision of the voluntary liquidation Section 59 of the code will be applicable to the corporate person who is intent to liquidate itself voluntarily and has not committed any default. Winding up a company. In most of the cases, winding of the company will be through the liquidation process under the code only.